We've been looking at ways cryptocurrencies can be a force for positive change. One example is Ripple. It's a platform used to make international monetary transactions faster and cheaper. Now, one way Ripple facilitates that is by using the cryptocurrency XRP. I asked CEO Brad Garlinghouse to explain what XRP actually is and how it all works. Listen in.
XRP is like a Bitcoin. It's a digital asset. It's today the third most valuable digital asset. And what we do is we take a transaction between banks, and instead of having a bank pre-fund an account at the other bank, which is how correspondent banking works today, the Bank of Brad in dollars would pre-fund to the Bank of Julia, perhaps in pounds, and then I would debit and credit that. But that means I have to pre-fund and have dormant capital sitting at that other bank. What we allow banks to do, we allow payment providers to do, is to tap into the liquidity of XRP liquidity. So today there's lots of liquidity between XRP and US dollar. There's lots of liquidity between XRP and British pound. And you could tap into that to move value in real time, in seconds. And even compared to Bitcoin, which takes up to 12 minutes to complete one transaction, XRP is extremely fast at about 3 seconds per transaction. That has meant XRP is extremely scalable in contrast to how Bitcoin works.
So it basically goes, Bank Brad has dollars, dollars get transferred to XRP, then XRP is transferred to sterling, and sterling then hits Bank Julia. That's how it works.
That's exactly right. And so from a consumer point of view and how we're working with, for example, a MoneyGram, the consumer itself doesn't actually see that it's flowing through XRP to solve the problem. What the consumer sees is simply a better product at a better price. That's good for MoneyGram, that's good for MoneyGram's customers. And so we're seeing more momentum than we've ever had around using XRP to move this liquidity around the world. And so we couldn't really be happier about how that has played out in a world where there's still a lot, I think, of FUD, a lot of uncertainty, a lot of doubt about what's going on in crypto. This is a real use case solving a real problem for real customers.
Okay, so which banks right now are actually using Ripple?
Well, we have signed up about over 200 banks around the world. Some of those banks just use our software to do that debit and credit, fiat to fiat, and some of them are using XRP in those flows. We have banks like Santander that we've been working with for years and are moving lots of volume through the Ripple's technology. And then, as I mentioned earlier, payment providers like MoneyGram or Ria or Asimov that are using XRP actually to move that liquidity and really reducing their costs and improving the product.
Just in terms of the transactions, though, that you're seeing using Ripple, what proportion of those actually use XRP versus direct? And just where do you see that ratio going? I'm just trying to get a sense of sort of how much XRP itself is actually used as part of the Ripple platform.
So I would say the order of magnitude, the way to think about it, is similar to the proportion of customers. So if we've got, I don't know, a couple hundred customers we have launched, 10 to 15 of them we've talked about using XRP. I would use that ratio as the total ratio between what's happening with Ripple's technology overall.
XRP, like Bitcoin and other cryptocurrencies, has been volatile. I asked Brad if the message to investors is don't use XRP to speculate.
People are going to speculate on different asset classes. People speculate on gold, currencies. You name it, people are going to speculate. When we think about this, and what I've said very publicly is I think the long-term value of any digital asset is going to be derived from the utility it delivers. There is a lot of hype in the crypto market space. We've seen that even recently. A lot of attention around what's going on with Libra and Facebook's announcement around Libra. Today, that's just a white paper. It actually isn't. It isn't live. It hasn't launched. And so I think the hype often gets ahead of reality in many technologies, and I think that's true in the crypto space as well. What I would encourage any person looking at this marketplace is to really understand what is real, what is not real, and understand, is there a use case? Is there a utility? Bitcoin, I'm long Bitcoin, and Bitcoin I think has real utility around being a store of value. It's digital gold. But if a Bitcoin transaction takes on average 12 minutes to confirm and the transaction cost is over $1 per transaction, that's not going to be great for a payments solution. So around payments, we think XRP is uniquely and extremely well positioned to solve that payments problem. It's extremely fast at about 3 seconds per transaction, and it costs about 1/1000th of a penny to actually enable that transaction. So we often make the point that where Bitcoin is very profound in solving that store of value, an XRP transaction's about 1,000 times faster and it's about 1,000 times cheaper per transaction.
I saw some Twitter traffic, one in particular, Crypto BitLord, that's threatened to take over because they say that you, the company, is dumping, that you're pushing supply out to the market. Can you explain to me the difference between XRP and Bitcoin with regards supply and with regards how much ownership Ripple itself actually has as a proportion of XRP out there at this moment?
Okay, so the first thing to understand is these are all open source technologies. When people talk about, forking technologies, you have seen Bitcoin forked multiple times. You have Bitcoin Cash, Bitcoin BSV, Bitcoin Cash, Bitcoin Diamond, Bitcoin, I can't name them all. There's 4 or 5 forks of the Bitcoin blockchain. Bitcoin, obviously, the primary BTC has remained kind of the most notable. But in the same way, people can take XRP, an open source technology, and hypothetically, they could fork that if they chose to do so. Now, around the ownership piece, as is the case with Bitcoin, there's some big whales that were early in the Bitcoin community. There's one wallet that has 1 million Bitcoin in it. Nobody knows who owns it. In the XRP community, Ripple is the largest owner. And the point I have made is we are the most interested party in the success of the XRP ecosystem. We're very focused on our use case and how do we solve problems with XRP. But one of the things I'm excited about is you're seeing a growing ecosystem of other players investing in other use cases around XRP. Just recently, we announced a partnership with Coil, which is doing micropayments for content. So next time you're reading a story on the Financial Times website and you hit that paywall, you hypothetically could just pay, hey, here's a dime, here's a quarter, here's 50 cents. Where today, that's a pretty hard problem. And companies like Coil are going to use XRP for those micropayment transactions. So yes, Ripple owns a lot of XRP. We're very interested in the success of XRP. But the accusations of us dumping, that's not in our best interest to do that. We're clearly interested in a healthy, successful ecosystem, and so we would never do that, and in fact have taken steps to lock up most of the XRP we own in escrow such that we can't touch it.
Interesting. So, but you agree that you can control the price to some degree because ultimately the Ripple community has so much power, no?
No, I mean, if you look at the correlations between XRP and most of the crypto market, or what are often called the altcoins, you see a very high degree of correlation. Ripple can't control the price of XRP any more than the whales can control the price of Bitcoin. Some of these markets, particularly smaller tokens that are have a lower market cap and lower float, if you will, they are at risk of people manipulating them. But you're talking about XRP trades, order of magnitude $1 billion, according to CoinMarketCap, trades, on order of magnitude $1 billion a day of activity. So I don't think anybody's in a position to really manipulate those prices.
It's quite funny. One of the big questions that I was asked when I was talking to people about XRP, they said, what price do you sell XRP to the financial institutions that you're dealing with here? Do you give them a discount, and is there a lockup? Can you answer those questions? Because this kept coming up.
Yeah, sure. So, let's use MoneyGram as the example. When MoneyGram is moving money from US dollar to Mexican peso, they're buying at market. They're not, there's no special sweetheart deal there. There are times when we work with institutional investors who might say, hey, we want to buy $10 million of XRP, and we would have lockups that would prevent them from dumping. We don't want some other party buying a whole lot of XRP and dumping it on the market. And so we would hypothetically have restrictions about what they could sell and what, how often. And usually those are based upon volume in the market.
Yeah, so you might give them it slightly cheaper, but you say to them, hey, you're not allowed to sell it for 6 months, let's say, or a year.
Yeah, correct. That's basically correct.
So just at a time when cryptocurrency investments are battling to become more mainstream, a behemoth facing some skepticism on its own part is trying to enter the space. Facebook announced plans to launch its own cryptocurrency recently, Libra. Now, their scale could be potent. Could that be a bad thing or a good thing, though, going forward? I asked Brad that very question.
I think it's been net good for the industry to bring the attention that Libra has brought on the industry. I think that part of the maturation of the industry is that transparency and that debate, that healthy debate. And so net, I think it's been a good thing. I think it's way too early to predict exactly what the implications are going to be. You know, Facebook obviously is a consumer-oriented company, came out and talked about how they're more aggressively competing with financial institutions. They highlighted Western Union as an example. And so our view is, hey, we can partner with those financial institutions and help them solve a problem at scale that we've talked about here. So I think it's too early to tell. I think Facebook came out in a way that probably wasn't as engaging to regulators as maybe they could have been, and that stirred up a lot of concern. And we've made the point that we shouldn't paint the entire crypto industry with a broad brush. There's different types of projects. Some are trying to be very regulatory compliant, like what Ripple is doing with XRP. There's also some that are trying to circumvent regulators, things like Monero, that are intentionally trying to be, they're about anonymity. And so I think, as regulators look at the category, they just need to be thoughtful about not painting it with one broad brush, and that's really what we've tried to emphasize.
The CEO of Ripple.